Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news that is important over a wide set of issues. Firstly, both the US Federal Reserve and the ECB have important meetings this week. The Thursday Fed meeting is expected to bring another 25 basis points rise to 2%. But that could also signal that it's done for a while now, and that would be a shift in market expectations. Meanwhile, the ECB meeting the next day was originally expected to signal the start of a pullback in their ongoing money printing, but weaker than expected recent growth data may see that postponed. These moves will come as the world digests the impact of a reinvigorated Trump isolationism, all based on facts so alternative they rightly deserve the scorn they're receiving. As others have said, the G7 meeting was a Trump train wreck. In Canada, their May employment data showed a surprise loss of jobs, but wages there rose at an unexpectedly quick pace, up an overall 3.9% year on year. And Canadian housing starts surprisingly fell in May compared with the previous month, as multi-unit urban starts declined, principally because multi-unit housing starts in Toronto slumped. Developers there are retreating after some public policy changes, and that's a bad sign for price containment. China's trade surplus shrank sharply in May on strong imports. The overall monthly surplus was down to $24.9 billion, and well below the $32.6 billion analysts were expecting. But the gap with the US widened, representing 98% of the total monthly surplus. Advanced shipments to the US ahead of the possible new arbitrary tariffs may be behind the unusual data. Argentina and the IMF have agreed to a 3-year deal to lend it $50 billion to help it deal with its currency and reform crisis. And over the weekend, Switzerland voted down its sovereign money referendum. It was rejected by a surprisingly large margin, 76%, and far greater than the recent poll suggested, which was 55%. US Treasury 10-year yield is at 2.95%, that's up 1 basis points. The Chinese 10-year is at 3.69%, that's unchanged, while the New Zealand equivalent now is at 3.02%, and that's up a very chunky 15 basis points. It represents a relative repositioning of the New Zealand government bond pricing. Holders have taken huge losses here. Oil prices are down today, and the US price is now just under $66 a barrel. The Brent benchmark is now just under $76.50 a barrel. And gold moved marginally higher over the weekend, up $2 to $1,299 an ounce. The Kiwi dollar will start today little changed at 70.4 US cents. On the cross rates were higher, however, at 92.6 Aussie cents and 59.8 euro cents. That puts the TWI at 73.1. And Bitcoin is now at $6,725, which is down 12.5% from where we left it on Saturday. This is a substantial fall, taking the New Zealand price well below $10,000, and overall prices are back to where they were in November 2017. A South Korean hack is behind the sudden drop. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.